As we kick off this segment here on the Market Day Report, by the way, we're talking with Todd Bubba Horwitz of BubbaTrading.com in Chicago. He's there at the CME Group trading floor. I want to start out this segment here, Todd, talking about this U.S. dollar value, which has been sagging today, but the crude oil trade has been sharply lower too. September U.S. dollar index futures down 390 now at 95.260. On the crude oil trade, at times it's been over $1 lower. It still is. October West Texas crude down $1.06 at 43.84 per barrel. So now we're solidly under 44 bucks. What do you make of this, Todd?
Well, I think crude's going to 40. That's number
Really?
one. Yeah, I think the technicals indicate that 40 is the level. And in my newsletter, I've told everybody to look to buy, oil, hedges for next year into the long side at 40. I think that's a great level. But we have, you mentioned the outside factors. The number one thing we have to watch right now, if you watch the bond market, bonds, interest rates, even though the Fed isn't raising, interest rates have been going up. If you watch the 10 and the 30-year bond, we were just at 1.5%. Now we're at 1.75. So we're creeping up, which is going to start to put some pressure here on the overall markets. The dollar knows it. And I think the markets kind of know it, which is why we've seen some pressure on the commodity space, because even though the dollar index itself hasn't ticked up, it's going to tick up, because if this continues, the stronger market, the Fed will have to raise, and of course we will see a spike in the dollar, which I firmly expect. But I also believe that the grain markets and a lot of the agriculture markets have already priced that in based on the action that I've seen. So I'm not really worried about it. I think we can only see good things coming forward based on the outside markets, because in my eyes, they've already kind of buried everything down. It's about as far as they can push it. Now, does it mean they can't go lower? No, it doesn't mean that at all. But I think most likely the lows are probably in or very close.
All right, now on the cattle complex, moving over to the livestock trade, the cattle complex has been trying to firm up today. October live cattle now up $1.02 at 105.70, so we're within a dime of our high of the day, and just like that, I say it, and 105.82 is a new high. $1.14 higher. December now 53 higher at 106.35. So we're within 7 cents of our high of the day, about $1.50 off of our low, more than that now.
Yeah.
Feeder cattle trade has been firming up. We have the October contract now just 25 lower at 130.30, so that's about $1.50, about $1.80 off of its earlier low today. November now 42 lower at 128, but the hog market, this is something, you said there's an old saying in the trading floor that it reminds you of that. October lean hogs down $1.47 now at 55.28. December 49.32, down $1.23 from our close yesterday. A lot of folks are getting freaked out of this lean hog market here because of its collapse below critical support. What's going on, and what are you hearing on the floor there?
Well, I think let's go to the hogs first. Okay. I think in the hog markets you've got a problem. Now, again, I own them, okay, and I think that 58 was a key level for me. But now we've gone from trying to break through that support to basically plummeting down, which indicates there's a lot of panic on the street. And you alluded to it. They call it the tap on the shoulder. I think somebody's been forced out here because the volume is too heavy for just a normal trade. So the last 3 days have been very heavy. And if you look at the chart, it's like straight down, like falling off a cliff. Right. So I think basically what's going to happen, we'll find some support here, and I want to see how it acts off that support. I would expect, no matter where we're going, a run back to the 58 level in October, and we'll see from there. But it's going to be very tenuous here, but this is what I would call a blow-off bottom, where somebody's being forced out, and I think that'll turn, and then we can look for the action, how it works from there. In the cattle markets, 106 is real important. In the fats, I think if we can get through, then we'll be on our way, but I wouldn't be surprised to see one more pullback down to about 104. 130 to 134 is huge in feeders. I think 130 we held pretty good today, and I think if we can hold that, I think we're going to 134 before we get a little bit of pressure. But overall, I think I like this space. I'm very concerned about the hogs right now, but I think that they could be okay. But I wouldn't be a new buyer here, but I'd watch. If they start to turn, I would jump in on it. 10
seconds, Todd. Can the hogs continue to collapse if the cattle market would turn around and go higher? Can they trade independently or not?
Yes, they can. They can. We've seen it happen many times. They can collapse if they have to, but I think they'll be okay.
All right. Well, thanks for explaining that, and I'll bring you back for the real evening news. We'll talk more about the markets then. Thanks, Todd. Appreciate it, and good luck
today.
Thanks,
Marlon. Have a great day.
All right. Todd Horwitz of BubbaTrading.com. Wow, what a wealth